Good morning, everyone. Thank you for the invitation, to be here, especially to Patrick. It's a pleasure for me to be here with you this morning and to share with you some experiences in terms of implementation of public sector accounting reforms in a number of countries. And particularly, I will be talking about two networks similar to PEMNA. One, it's called Pulsar, which is a regional Europe and Central Asia program, which groups 13 countries. And one of the main topics of the program is public sector accounting. And the other network is FOCAL, Forum of Accountant General of Latin America, which groups 18 countries of Latin America, mainly Spanish and Portuguese speaking. And it's also like a club of accountant generals, and they're discussing priority topics in terms of implementation of public sector accounting reforms. Talking about Pulsar and FOCAL programs, I will be sharing with you the key finding of several knowledge products we recently developed as part of the Pulsar program, as well as the current status of implementation of IPSAS reforms in Pulsar and FOCAL countries. Probably the most logical start for this presentation would be to talk about first-time adoption of accrual accounting basis IPSAS. You know, there is one of the international public sector accounting standards is specifically dedicated to this topic. It's IPSAS 33. So the Pulsar team did some additional research and look in more details at the IPSAS 33 and come up with several conclusions, findings, lesson learned, recommendation in terms of implementation of first-time IPSAS implementation for those countries who are just planning to start these kind of reforms. And as you know, the IPSAS implementation could be classified in two different ways. The first one is direct adoption, and the other one is indirect adoption. The direct adoption has to do with the adopting IPSAS without altering the original content of them, and the implementing entities are encouraged to adopt IPSAS directly as they are. The other method, indirect adoption, has to do more with the process of endorsement of the national public sector accounting standards, which in turn should be aligned with the international public sector accounting standard framework. The national framework usually also takes into consideration some country-specific circumstances, and this is why many countries with strong legal framework, they prefer to opt for indirect implementation of IPSAS. And the IPSAS 33, which I mentioned before, is helpful for implementation of IPSAS using both methods, the direct and indirect. Also, there are mainly two methods for IPSAS adoption, which could be phased or could be big bang IPSAS adoption approach. The phased method, which also is most recommended based on the international good practices, involves progressive implementation of improvements in a planned sequence, enables jurisdictions to demonstrate quick wins by allowing some IPSAS requirement to be met in short terms, allows time to build IPSAS-related skills and expertise in keeping with the pace of further implementation in the coming months. However, the main risk of this approach is long implementation periods, and we're talking about 5 years and more, reform fatigue, as well as the loss of momentum and political support. And as you know, the political support is very important for any public financial management reform, including the public sector accounting. And maybe right now you have a supporting minister or deputy minister who is fighting for the reform, but in 5 or more years, probably the government has already changed and there is not much enthusiasm to support this kind of reforms. On the contrary, the big bang approach has to do with switching from the pre-IPSAS to full IPSAS compliance commencing from a particular date, meaning implementing all IPSAS at once. In some jurisdictions, it's only option due to national law re-equipment, which may not permit to phase the implementation, and the parallel dry run of all the new system usually is costly and requires additional operational capacity. Therefore, the main risk for this approach is the high dependence of external consultants, because there is not enough internal institutional capacity to implement all IPSAS at once, extensive use of internal organizational skills, and significant delay in startup until all the preparation necessary for full implementation are completed. IPSAS 33 is designed for a phased approach, since it includes some exception over a 3 years period once the IPSAS are implemented. Under the IPSAS 33, there is foreseen 2 phases, the preparation phase and transitional period. The preparation phase consists of a specific period decided by the implementing entity, by the government, to get prepared and ready for IPSAS rollout. However, it may take longer as needed, and usually a long and arduous process. Strategy and roadmap needed leading up IPSAS 33. And actually, the development on proper public sector accounting implementation reform strategy roadmap is requirement for any methods the country would choose to implement the IPSAS. In terms of the transitional period, it follows the adoption of IPSAS 33, shouldn't exceed 3 years period. It could consist of various exceptions that would be stated during that period. There is no explicit on-resort statement of compliance with IPSAS during this 3 years period. This is like a summary or timeline map for the first-time IPSAS adoption using the IPSAS 33, where we see the preparation phase prior to the date of the adoption of IPSAS. One of the requirements for the first-time IPSAS adoption is to prepare opening statement of financial position, following by the first transitional IPSAS financial statement at the end of the first year of IPSAS implementation transitional period. Then there would be second and third transitional IPSAS financial statements. And finally, it's expected to have explicit and unreserved statement of compliance with the IPSAS in the first IPSAS fully compliant financial statement. This is a little bit country experience, is international experience in terms of the first-time IPSAS adoption, including several countries, among them Costa Rica, Malaysia, which is part of PEMNA, New Zealand, Nigeria, Switzerland, and Tanzania. You can see that in terms of IPSAS adoption approach, most of the country decided to use the direct approach. However, I also see a lot of countries that follow the indirect approach of IPSAS implementation. However, in terms of the reform implementation, the phased approach probably is the predominant in most of the countries around the world, and very few countries, small countries like New Zealand, could take a risk and implement IPSAS using the big bang approach. Most of the countries, they actually didn't use the IPSAS 33 because IPSAS 33, it's one of the relatively recent standards. So some of the countries, they started the IPSAS implementation before the IPSAS 33 was issued. However, half of the countries, they did use the transitional provisions of the IPSAS 33, including Costa Rica, Nigeria, and Tanzania. Some of the lessons learned in terms of the first-time IPSAS adoption are summarized in these next two slides, and they include application of proven project planning and implementation methodologies, and we will talk a little bit more about that later on. Set up an interdepartmental IPSAS project steering committee to drive the transition, monitor IPSAS adoption strategy, and reassess and adjust as necessary the strategy. Regularly update the governing bodies through implementation progress reports, allowing them to act when projects are at risk of stalling. Timely amend laws, rules, and regulation in the early stage of the projects to make the transition mandatory for all entities, and allocate resources for the project through a multi-year budgeting mechanism. Some additional lesson learned has to do with the determination and budgeting for the additional human resources required in the administrative, budgetary, and finance areas to ensure effective capacity building for transition to IPSAS. Ensure adequate resources are provided for training, capacity building, and change management throughout the reform implementation. Communicate awareness of IPSAS transition progress through all available means of communication, including training and dissemination. Adopt risk assessment, management, and mitigation strategy, considering good international practices in terms of project management. Ensure proper integration between the key PFM models to include, as a minimum, accounting, budgeting, and treasury management. And ultimately, ensure independent and comprehensive quality assurance of the progress assessment reports. Some key recommendation for the first-time IPSAS adoption. It's definitely to consider the 3-year transitional period according to the IPSAS 33 as the last stage of the adoption process. Develop and implement strategy and roadmap with a credible time frame for the accounting reform ahead of the date of the adoption. Provide continuous training and capacity building activities throughout the IPSAS reform process, and ensure coordination between the champion for reform implementation, usually it's Ministry of Finance or the Treasury, as well as the other key stakeholders such as tax administration and supreme audit institutions. Some additional recommendations include prioritizing IPSAS standards for implementation, keeping in mind that IPSAS 33 doesn't allow a 3-year transitional relief period for several of the standards. Apply phased approach to IPSAS implementation, as Big Bang approach leads to delays and is too risky. Ensure that the opening balance sheet doesn't include outdated and obsolete data that might come from the current or previous financial management information system. And finally, exercise restraints in application of transitional provision in IPSAS 33, as they limit the benefit of IPSAS adoption in the short term and reduce the integrity and transparency of the financial statements. Obviously, if there is too many exceptions, so we can't talk about the full adoption as yet. The next topic of this presentation is the status of IPSAS implementation in the Pulsar countries, and I will talk about a little bit more about the Pulsar program and what the countries that comprise this program. As I mentioned before, the Pulsar is a regional and country-level program that supports the development of public sector accounting and financial reporting frameworks in beneficiary countries, which was established to scale up World Bank support of PFM reforms. And the program started its operation in 2017. There is certain beneficiaries countries in Pulsar under Pulsar program, including Albania, Armenia, Azerbaijan, Belarus, Bosnia and Herzegovina, Croatia, Georgia, Kosovo, North Macedonia, Moldova, Montenegro, Serbia, and Ukraine. And the main program objective is to support the enhancement of participating countries, public sector accounting and financial reporting frameworks in line with international standards in accordance with good practices. This is in order to improve government accountability, transparency, and performance, and also to provide a platform for knowledge sharing. According to the research and the publications the Pulsar program recently issued, There is clear benefits of implementation of accrual-based accounting system, which consists mainly of improving the quality of public service provided, ensuring fiscal stability and the promotion of national economic growth, and improving the acceptability and credibility of the governments. And the main three dimensions of these benefits has to do with transparency, financial management, and accountability. Some of the key findings of the publication was that each country is presented with a different set of opportunity and challenges. And all countries are progressing toward accrual accounting and IPSAS implementation at a different speed. Implementing IPSAS is central to all reform endeavors. Both direct and indirect approaches to IPSAS adoption are taken, and jurisdictions are at different stages in the adoption process. This is the map of the Pulsar countries, and you can see that almost 30% have already adopted the accrual accounting, including Armenia, Azerbaijan, Georgia, and Republic Srpska. Almost 60% are still using the partial accrual basis, including Albania, Belarus, Bosnia and Herzegovina, Federation of Bosnia and Herzegovina, Moldova, Montenegro, Kosovo, and Ukraine. And only 2 countries are still using the cash basis, which is North Macedonia and Serbia. In terms of using the different implementation approach, almost 30 countries used direct adoption, among them Azerbaijan, Georgia, Republic of Kosovo, and Republic Srpska. 43 countries, actually more countries are using the indirect adoption in terms of the Pulsar countries, including Albania, Armenia, Belarus, Moldova, Montenegro, and Ukraine. And still 3 jurisdictions in the phase of planning the adoption, and just 1 country has not started the adoption, which is North Macedonia. The main challenges in terms of the implementation of accrual IPSAS, based on the study conducted by Pulsar, is the use of either the direct or indirect IPSAS implementation method, and the challenges are related to the in case of indirect adoption of IPSAS through national standards, these countries usually face early challenges in the development of those national standards, but the implementation tend to be easier and smoother later on in the implementation stage. In the contrast, the countries that are adopting IPSAS directly find it relatively easy to adopt IPSAS at the beginning, because they just take the IPSAS as a year, but the challenges are usually coming up lately during the implementation process, when the standards have to be actually implemented. In both scenarios, the new standards require a sound legal basis, which in some cases need to be created, and in others at least updated. Main challenges identified by the countries were need for capacity building and staff training, need for technical assistance, lack of effective program management, lack of adequate IT infrastructure, high cost of reform implementation, conflicts between international standards and local legislation and context, limited availability of financial data, and institutional resistance. With this, we're moving forward to the experience of FOCAL network, and specifically the Latin American countries. Very briefly on the FOCAL network. FOCAL was established in 2014 in Santiago, Chile. Its key objective is to be a place for analysis, study, reflection, and exchange of experience, knowledge, and good practices for the development of accounting models of a professional and technical nature. For the period 2022-23, the executive committee is formed by the country of Peru, Mexico, and Ecuador. In total, there is 18 members countries, and the last one to join last year was Venezuela. The program has ongoing support of the Inter-American Development Bank as the main sponsor, and also of the World Bank, IMF, IPSAS board, and other donors. Last year, there was the 8th annual focal conference that took place in Mexico City in October. All the members countries participating in that meeting, as well as the representative from the Inter-American Development Bank, World Bank, IMF, IPSAS board, University of Zurich, and Ministry of Finance of Mexico, who was hosting the conference. The main topics discussed during the conference were the following: country experience in implementation of IPSAS in different countries, including Uruguay, Ecuador, Guatemala, Panama, Mexico, and Peru; digital transformation in public sector in GovTech Maturity Index presented by the World Bank; status of information system for public financial management; IPSAS for the municipal sector, case of Chile; sustainability reporting and preliminary results of the study in Latin America; linking the sustainable development goals with the budget programs and financial instruments. The current status of IPSAS implementation in Latin America is presented in this map. You can see that implementation of IPSAS is an ongoing process in most of the focal countries. Colombia and Costa Rica already have completed the implementation. Chile completed the implementation at central level, but still working at the municipal level. Most of other countries, the implementation is still ongoing. The only country that is still preparing for the implementation is Bolivia. Focal as a network is trying to support and provide support on the implementation to all of the countries of the network. Some of the lessons learned and recommendations from both Pulsar countries and focal countries are presented in the next slides. There is 10 very specific points in terms of the lesson learned that are cross-cutting and have been identified in most of the countries that are implementing public sector accounting reform. The first and probably one of the most important one is the political support and willingness of the key stakeholders to initiate and carry out the reform and ensure its sustainability over the time. It's also very important that there is a reform strategy and feasible implementation timeline developed on time and agreed on between the different stakeholders. The proper reform coordination and management arrangement should be established in time. Financial and human resources required for the reform should be secured throughout the implementation of the reform. Legal and regulatory frameworks should be timely updated. The structure of the new public sector accounting system should be defined. Either it could be centralized accounting, decentralized, or even through outsourcing. Or the risk management and mitigation mechanisms should be identified and established. Change management and capacity building is another critical element of the implementation of the reform. And also integration between different PFM functions, including the treasury, budgeting, accounting, and upgrading the existing or development of a new integrated financial management information system should be assessed and carried out. Reform monitoring and evaluation arrangement should be also timely established. The last part of this presentation has to do with the recent or newest public sector accounting assessment framework developed by the Pulsar program, and it's also known as PULSE assessment framework. I will talk briefly about this new tool, which is currently being piloted in several Pulsar countries, but in the future it could be also of interest for some of the PEMNA countries to assess what is the current status of the public sector accounting system in their countries. The main objective of the POLS framework is to support national and subnational governments in developing efficient and effective public sector accounting systems. The tool also helps public sector entities to develop an understanding of local public sector accounting system and environment, the gap between national and international frameworks, and the gap in actual application between national standards and the IPSAS. Some of the characteristics of the tool: it will be a free, global, good, and user-friendly web-based self-assessment tool. It's designed for both national and subnational government, but may be also applied by any reporting entity, such as international organization, central bank, public corporation, or government agency. It systematically collects information on the current performance of public sector accounting systems, standards, and practices, offering a single tool to measure the report on both the conceptual and actual implementation of accrual accounting standards for the public sector, and it offers a two-perspective approach that allows to identify any disconnect between the national and international frameworks, as well as the level of actual compliance with IPSAS. Some other characteristics: it's also provide inputs for development of comprehensive public sector accounting reform strategy and roadmap, including policy recommendation and action planning. The assessment methodology is based on the PIFA assessment framework that you might be already familiar with, and the latest set of IPSAS pronouncement. The quality of the assessment and the final report is ensured through multi-layer quality assurance arrangements, and including an external validation process and pulse check. The basic structure of the tool is it consists of 6 pillars. It has 29 indicators and 102 dimensions in total. You can see what are the main elements of the tool. There is 10 steps in the use of the assessment process. It has 4 phases, and it's expected that the estimation total duration of the process should be less than 6 months. Some of the main stakeholders of the assessment process is the lead agency, which is usually Ministry of Finance and Treasury. It's an oversight team that is kind of steering committee that would take the ultimate decision and approve the final report. It's external validation team which will ensure the quality of the data and the final report. The Pulsar team, which is will be overseeing the overall quality and conduct the pulse check. The peer reviewers, the assessment team leader, assessment team, and external stakeholders. There are basically 3 assessment modes. The primary one is the full self-assessment approach, in which case the pulse is undertaken by the lead agency with the mandatory external validation. But in exceptional cases, the following 2 modes are also possible. External assessment mode, which is conducted fully by external experts, and blended mode, which combines self-assessment with assistance of external experts. The option to choose these modes depends on the jurisdictional situation, including resource availability, institutional capacity. The next steps in terms of rollout of the tool is the finalization of the user and administrators manuals, which is expected to be completed this month. Identify the first 2 pilot countries, which have been already identified, and it will be Ukraine and Moldova. Complete the first round of pilots by the end of the June. Revise the Pulse handbook and online tool based on the pilot's result by end of September. Then following by the conducting of the second round of pilots and finalization and translation of handbook and the online tool to different languages, starting with the Pulsar languages. This is all on my end. Thank you very much, and I will be more than happy to respond to any of the questions you might have.